Hello guys and girls and welcome back. It's Big John here. My ad's at the bottom of the screen if you'd like to listen to my music. I'll also put a link to my SoundCloud so you can get directly to my music on SoundCloud as well. So today what we're going to be learning about is a strategy called the wave. Now I've been busy in the lab like Dexter and I've managed to put together some indicators that will show us a good way of being able to catch second legs of M's or W's following the trend, or I will show for the more experienced people counter trend trading as well, where you can still find good entries. But we'll start with the safer trades first. So without further ado, let's get straight into the video. To start the strategy off, straight to the point. So what we're going to be doing is chasing second legs of M's or W's following the trend. So for this trade here, I would have entered this trade coming out of Asian session. Look at my M here. I would have entered my trade here, and then look at this. So my second leg of my M, and then I would have been able to catch this going all the way down. Now Taylor has programmed in candles that work for pullbacks, so you can see here this is a pullback. So realistically you could have got in here, but my trend wasn't full as well at the same time. It's best for you to wait for your candle to close with any of your indicator features, just so you know they stick and they don't repaint. So my entry would have been here. Here again, I would have waited, wouldn't have sold yet, broke the 200 moving average. I know it's still red. All of this is strong for me. It's been red from here. So I already know that the indicator is not going to repaint. I would have got in on this candle here. I would have took it down, got all my pips going down here. Gold, this was a perfect one. This is one I saw play out today. I was actually a bit bugged that I missed this one because this was a good one. Look how it came here. So this is a perfect trade for you here. Look, W formed here. Would have been able to get in. If I use Pip Hunter here, if I don't go here, I would have got in on this one here, right here. I would have took this all the way up and got all these pips, and I would have just kept trailing my stop loss all the way up. This was a beautiful W on silver, but we wouldn't have traded this. As I can see, it was consolidation because the 200 moving average was in between. We want the 200 moving average to be below price or above price up here. So if it was above here, we would have caught this going down, let's say. If it was below here, the 200 moving average, we would have caught this W going up perfectly. No problem whatsoever. Okay, here. So we're waiting for a W to appear here. So we want this to go down here, red, like this it did here. We want it to go red, and then we want it to go green up for a W. We wouldn't have traded this. So this is how easy it is. The first thing I'm looking for in my confluence list is just to see where my 200 moving average is. Then I'm looking for my M and W to pop out of Asian session into London session. Sometimes you'll still get a move in New York, like what's happening here. You can see this is the New York session box, this is the London session box, this is the Asian session box. So what it's going to tell me here is if it goes down here, then it creates the W to go up. I'm looking for a move to buy. This is that simple. I look for a move to buy, and then all I'll do is wait for Pip Hunter trend and momentum to kick in. This is Bitcoin. Went here. Wouldn't have bought this. Look at where the 200 moving average is. It's not clearly below or clearly above, but look where it was when it was clearly below. Look what it did here previously. Look at this. See this? Look at that W. And then what did it do? It went shot all the way here. Your entry point would have been here. You would have seen this. Your entry point would have been here, and you would have got these pips going up here for Bitcoin. So now this is an example of a counter trend trade. This is not what I'm telling beginners to do, but once you are more advanced with trading, then you could do something like this. Reason why I say this is because look where the 200 moving average is. But look here. Look at your Pip Hunter momentum and trend. You was in perfect sync. So you would have waited for it to come out. You could have got in on this candle here, could have held your position. Okay, so now what we've got here, we've got a W that formed here. So now you can see the M is forming here. So what you'd expect to happen here is for price to go back down. Look how beautiful this is. You can see all these M's and W's. You can see all of this. The reason why I call this strategy the wave is because it's based on the Elliott's wave, which is the M's and W's, head and shoulders patterns, double tops, double bottoms. Look here, here's another counter trend trade. You would have seen it's come in, it's gone up, gone down. Look at this, W. This is why sometimes you see pairs doing this craziness as soon as London session opens. This is what it's doing. It's deciding its move through before Asian session or within Asian session, and then it's straight up. Look, London session, it didn't even play. It played no games. I ain't played no games. That's what it did, all the way up. And now what you'd be expecting is an M to form. And now we're going on to this one here. So I would have traded this one here if I wanted to, as soon as it broke the 200 moving average. And then it's got into here. Look, I had more than enough time to catch this going all the way down. It's an M. You can clearly see the M pattern form there. GBP JPY, this was a trade you could have took. Look, it was clearly the second leg of an M. Look at it here. This was the W up here. Sometimes you've got to zoom out to see what you're seeing. Draw the patterns out. And here was the first leg of the M going down. Then it went up for the middle part of the M. Then you can already see it started. The second leg of the M went all the way through Asian session. What told you this is, look where the weekly low was. Sometimes this does move down a bit more, the weekly low, and the weekly high will move up a bit more as price gets close to it. But it would be at some sort of range with space, so you'd see it. It wouldn't be all the way up here. It would be some sort of range with space. And then as you can see, you could have got in here. You would have seen this. Look. And here was your confirmation to get in. You could have got in on this candle, retraced against you a little bit, but then after that, dropped all the way back down. Had JPY, same thing. Look at the M, same thing. You can see it underneath the 200 moving average. I'm sure you're getting the confluences by now. Just in case you ain't, underneath the 200 moving average, you can clearly see an M was formed here. You can clearly see it's come out of Asian session range, Look at the time. For me, it's early in the morning. Then it comes into London session. I've seen this. Look at my confirmations here. I've seen this here. Wait for that candle to close. Would have got in here. Could have got in here straight away. Took that all the way down. See this one here. Again, underneath. This one was already close to the weekly low, so there was no point that you wouldn't have taken this one here. Look, it was already close. You never sell low and buy high. You always have to buy low, sell high. So either way, that's why I look at the buy. Look how big the buy was compared to any of the sells here. But you wouldn't have got any of these yet. No trade here valid for you. You wouldn't have got none of these sells, too low, so you would have waited. Here, I would say again, still too low, so you don't have to risk it. If you see that it's too low, you don't have to take the trade. Please, for new traders, don't have FOMO. Don't have fear of missing out. There's going to be a trade every day, 5 days of the week. It's going to be a trade. You don't have to wait. If you don't catch a trade today, leave it. Watch how the trade's played out. So then you can take it back as research and say, okay, this is what happened here. This is what happened here. It's better to keep your money than to lose your money. So this trade here, I would have said I wouldn't have taken it. It was too close to the weekly low. Not even the daily. It was close to the weekly low. So the amount of push this possibly could have had wouldn't have been that great for you. Look here. This is a perfect counter trend trade. So you can see the difference. Comes in. Yeah. So you can see here. What we're seeing here. W. M, yeah, first leg of the W, comes up, drops out for the middle part of the W, and then look how that move goes all the way here. So if you're counter trend trading and you've got a bigger account, less risk, you could have took this one here. I would never suggest you do the 10 pip challenge counter trend trading. If you're more experienced, but you're just looking for a system that shows you trend momentum, just more confluences, so you're more safe with what you're doing, this is a perfect setup for you. Telling you, you can't go wrong. This is amazing. Look at this. You would have got in just here. You would have caught these candles up here going in nicely. Nice and comfortable. People are already having amazing results with the strategies I've already posted, but I'm going to keep giving you these strategies as long as they are giving solid results. And you can go into the testimonial group. I will put it in the link below as well. You will see what I'm saying. People are getting results. I'm not just here chatting just to get people to use Pip Hunter or to trade. There are results and people are seeing them. You have to believe and you will win. See here again, dropped out of Asian session. Look how low the weekly low is for you. So it's nice, nicer anyway. Could have got in here. Could have caught these pips going down here. Look at that. That was a big M. Look at that big M. You see? We only trade the second legs of M's or W's. That's what you realistically want to trade. You can trade other parts if you want to, because they can be big parts. There's always going to be small M's and W's inside a bigger M and W. But I would always suggest a clear visible M or W, you want to trade that. There is no indicator to tell you that this is the second leg here. Trade now. Like, there is no indicator I have found yet, should I say, that shows you that precisely, but you can work out something to make it better for you. And that's what I'm trying to do for you here. And here's New Zealand Japanese yen. Could have got this one here. Look where the weekly low was. Even if it was about here, you still had space because it could have pushed it down. I'm not saying it started here. Could have pushed it down a bit. Look. Here, drops out of Asian session. Could have got in here. Retraced a little bit, but look at that. If you had a nice one, you had your 15 to 20 pip stop loss. This wasn't coming back towards you. You could have caught that. Look at this one here for the more experienced traders. Asian session. would have got in on this candle here. If you caught this one, this was even better because this was past the trend, to be fair. Wasn't even for the more experienced. Look, it's past the 200 moving average from the bottom. Yeah, your double bottom here. So it's a W. Look at that W. Look at that. And then you would have caught this going all the way up there. Look at that. Oh, I'm giving the sauce. Giving the sauce out here. So as far as we get good results with this, I'll definitely be speaking to Taylor about making some sort of link with these indicators so you wouldn't have to use all the indicators. Look at this same thing. Broke through. Again, when it broke through, look at this. You already know it was strong, so your entry candle would have been here. You could have took this all the way up. Once again, you could have just put your stop loss just below here, 15, 20 pips. Ride it up. You know it's past this. So this would act, the 200 moving average would act as some sort of support for this. So realistically, you just want to put it just below here, probably about here. That's your stop loss, and then you would have just kept trailing your stop loss, bringing it up. It's about to form an M now, as you can see. It's going to done the W. Look at the W. Look at that. It's about to do the M. Okay, and this is NAS 100. Look at NAS 100. Look at that beautiful M it did do, though. Look, you can't tell me you can't see this M. But now, here's what you really wanted. Look at this W. So yesterday, look at the W it did. It did an M coming out of Asian session here. Consolidation M. Wasn't the best. It was kind of nasty. But, you know, that's how it goes. And then look here, if you wanted to have an aggressive entry, if you know your stuff and you wanted to have an aggressive entry, you could have got in here, but your trend and momentum wasn't in play. But this is NAS 100, so a nice entry like this, with your stop loss being just below this 200 moving average, look at those pips. But if you got in safely with Pip Hunter trend and momentum, which would have been here, look, you still could have got all of these pips going up here. And you avoided all of this, up, down, up. You avoided most of that, could have got in. Nice and simple. Look at that. Same thing it's about to do now. You can see the clear defined W that it's got to create. It's gone here. Look, it's bounced off this again for the aggressive entry people. Look, it's going up. Like, the indices are so much better. And if you want me to do a video on the indices using this system with Pip Hunter, then I've got no problem. I'll do that for you. Just put in the comments below. I'll definitely hit that up. Now, this is why I'm going through all of the pairs, because I want to show you how you can trade all of the pairs like this, but you don't have to trade every single thing. Trade what you like. I would suggest picking 1 to 3 or just picking GBP pairs because that happens with London opening. Obviously, London opening, GBP, it makes sense. But I'm just showing in the video you can trade everything. Look here. Goes up. Look at this M. You can see the clear M. Look here. You're underneath the 200 moving average. So you know most likely if it's stopped here, hasn't broke the 200 moving average, Pip Hunter has told you it's a level 6 move here, level 6 sell. Now, I would have personally said this was one of the trades of the day because being a level 6 time frame move, this means 6 time frames are in a bearish motion. It's below the 200 moving average. It's a second leg of an M, and it's and at the same time you have your trend and momentum in play. Goes all the way down. What more could you ask for? It's got to touch that weekly low. That's a beautiful trade. Look here, AED breaks through, comes here. This is Asian session here. Your breakout, you'd have seen that it's already stayed strong. And then you would have just got in here. You would have took all those pips all the way down. Here, CAD CHF, same thing. You can see your momentum's already strong throughout Asian session. Comes through. Look at that. You see it's an M. See that clear and defined. That is an M. You'd have been able to get in around here. You would have got this all the way down here. Look here, same thing. What do you see here? That's your W there. This is your first part of your M, goes up, goes down. It was telling you it's getting ready. And what do you see here? You can even see it's clear. Look, bearish for the M, bullish for the M. When it's got to create it, and then bearish. Second leg of an M hops out. He had perfect entry on this candle here. You could have got this one. See what I'm saying by GBP pairs? You would have caught this London session GBP pair. You would have caught that all the way down. Euro, look underneath the 200 moving average. M, look here. So I would say beginner start. What you want to do is you just want to go through all the pairs. See everything that's below or above a 200 moving average. So it's safe. And then you start marking those off saying, okay, yeah, I'm going to look for a buy here or possibly a sell here. Has the MOW been, is it being created? Look here, you got your sell as well again. Like, look, this is crazy. Why the market has so much volatility, I would say today is Monday is an okay day to trade. But Tuesday, Wednesday, Thursday, sometimes possibly Friday are better days to trade. You want to catch the markets from when it's starting the proper side of its weekly cycle. A lot of the time, Monday is basically the Asian session for the week. And here again, look at that M. You can see the M comes out here. Could have caught this. Look at that all the way down. This is obviously a counter trend trade. We can see straight away. But look at that. You can clearly see the W. Before I even got there, look at the trend and momentum. Full. You would have got in here. You would have took that all the way up and trailed your stop loss. If you was counter trend. These trades are for the more experienced people. I'm going to make sure I keep saying it because I don't want people that just get Pip Hunter and start taking these trades. Remember, the more experienced people can counter trend trade. It's a counter trend trade because the 200 moving average here is against you. So if you try and trade this, you have a chance that it can hit here and retrace. But then it can also break it. So the more experienced people will want to take this trade if they want to. How they would have known this was a good trade for them to take, because they could see the momentum and the trend is staying towards the bullish side and it has not weakened. When it weakens, this is how you would get out of a trade. So let's say you're in this bearish trade here with Pip Hunter. This is where you get out. Look, it's flipped over to the positive side, and down here as well, it's flipped over to the positive side. And same if it's bearish. So here you wouldn't have got out of this trade if you was in it here. You would have got out when it does obviously flip over like it would do here. So if it was bearish, you can see here. This was your exit signal. AED New Zealand, look, popped out here. If you wanted to, could have got it here. It was a level 6 sell. So this would, look at this. M underneath the 200 moving average. Got this, got here. You could have come in here. Look at this. You had level 6 on your time frame bearish. You had a full downtrend on Pip Hunter. You would have been able to catch that going all the way down. Look at that. Giving you trades upon trades upon trades today with this setup. This is crazy. Look here, again, broke through. Even if you would have waited, look, broke through on this candle anyway. So then by the time you've got your next candle, you could have got in here. It did go against you. I believe that, yeah, it did retrace and pull back against you. So if your stop loss was underneath the 200 moving average, you would have been better here. I would never over leverage on GBP New Zealand or AUD New Zealand. Just don't do it because they're heavy pairs in terms of how fast they move. And then here, stop loss would have been down here. You could have still called this going up here. Here was a counter trend trade on this one, but look at this. You can see when you've got counter trend trades, what seems to happen. Pip Hunter still manages to kick in before you're even passed to the other trend. So you can see that it was some sort of decent trade because even though it was a counter trend trade. But look, this was the best one. It's come out of Asian session, anchored down. Then Pip Hunter's told you to get in from here even, but you would have got in from here and then you would have took this all the way up. Counter trend trades for the more experienced traders, not for people that just started. Look here, W form, came down, came up, came down, shot through, broke through. It broke through here anyway, so let's say you wouldn't have got here, you would have seen it closed on the other side of the 200 moving average. Your entry would have been here. You would have caught all these pips going up. This is trades upon trades, man. And then there was Euro ZAR. I'm just going through every single pair because I want people to see how wide the range is of how you could have caught these moves. Remember when I said that if it goes against the 200 moving average, look how it got to the 200 moving average, bounced pretty much off of it and slammed all the way back down. These are things you want to be careful of. Yep, and this is UK 100 or FTS 100. Look here, dropped down, broke through. Could have got in on this candle here. It did retrace back against you, but then you could have got these pips all the way here going down. So right. So yes, guys and girls, that sums it up. I'll make a separate video with all the settings for this. The video will be in the Pip Hunter group. Make sure you get into the Pip Hunter group. The link will be in the description below. I'll do it that way so this video won't be as big as it should be because it will be big already, I'm sure. So if there's any other questions, please leave any comments below. If you would like to purchase Pip Hunter, all the links will be in the description below. Please, you got to bear with Taylor. There is a lot of people trying to message him. He's only one man and he has to add Pip Hunter to your system manually. He will get back to you as soon as he possibly can when he's at his desk. And if you'd like to get TradingView Pro, my link is in the description where you can get a referral. And if you'd like to join my gold group, the link is in the description below. And I think that wraps it up for today. Bit of a long video again. I try and make them short, but you know how this thing goes. So yeah, peace.